Hey, y'all, welcome to Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making them move, and what to expect for the future. Today is Monday, the 27th of March, 2023. It is now 5:24 p.m. Central Time. And for all the real estate agents that are watching this show each day, I want to let you know why it is 5:24 p.m. Central Time, and I'm just getting this report out. This time, it's not because I wanted to wait and see what happened with the markets. It's not because I was waiting for a report to come out. It's because I was busy. I was busy with people on the phone all day. We are getting busy again. We're coming into the summer selling season, and here's the thing we talk about all the time. Last week, we ended with home loan interest rates on the Brent Bruce Daily 30-year fixed conventional touching the fives, the high fives. We know that is a psychological number that we're always keeping an eye on. And whenever we get close to those fives, within a couple of days, we begin to get very busy. Everyone seems to figure out, oh, interest rates have dipped down a little bit. I want to try to jump on that. I better get ahead of it. And you better get ahead of it, because if interest rates convincingly come down into the fives, the mid fives, man, don't have an open house that you don't have 100 extra bottles of waters and sandwiches for the whole neighborhood, because it's going to be packed. And I'm hearing about open houses being packed already. So the good news is we are starting to see a lot more activity. Now, we know again that the home loan interest rates for our 30-year fixed Brent Bruce Daily were beginning to touch the fives last week. We're not having a very good day today on the mortgage-backed security market, and we have to take a look into that. So let's take a look and see also what's going on later in the week and what to expect. Okay, so we're down 47 basis points today, which, as you guys all know, that is not what we want to see. Look at the 10-year Treasury is up 16 basis points. Both of these are still leftover issues from the banking issues with Signature Bank and Silicon Valley Bank, and what's been going on with the buyout of some of their assets, which are a lot of those were mortgage-backed securities that they owned. I mean, they owned billions of dollars of mortgage-backed securities, and that all needs to get shooken out. Take a look at the charts here. We opened up lower for the day under the 200-day moving average. We were not able to win the battle here, as far as staying above the 200-day moving average. We got pushed back down even under the Fibonacci level here at 100.758, and we closed right on it today. So we closed right here, hoping that we will go north and start to battle with that 200-day moving average. The 10-year Treasury also up 16 basis points. We'll get to the interest rates here in just a moment and see what the effect of being down 40 basis points did to our home loan interest rates. You can see that the 10-year Treasury, again, we want this to go down, not up, went above this Fibonacci level, broke through this ceiling here at the 200-day moving average. So both the 10-year Treasury and the mortgage-backed security that we follow are both now battling with the 200-day moving averages again, which we know is very difficult to break through. So what is going on with our home loan interest rates, and how has that transferred over? Let's take a look and see. Now, again, we were talking about the very high fives, 5.999 on a 30-year fixed conventional home loan for the Brent Bruce Daily. Now, again, the Brent Bruce Daily is a very well qualified 30-year fixed conventional home loan, 800 FICO scores, 25% down, single family residence, primary residence. Where are we at? 6.5. All right, 6.5. So are we up 0.5% just because we had a 47 basis point swing in a day on the mortgage-backed security? That doesn't really correlate. That's not how it should work. Those numbers don't add up. So this is why you need to understand how this all works. Yes, losing 47 basis points is not helpful, but that does not mean that home loan interest rates go up 0.5%. What you're seeing is a very skittish, scared mortgage banking world. No one knows what is going to happen. So whenever they hear anything negative or they see the market move in a negative direction, it really is magnified because they want to get in front of trouble. They don't want to have losses. We understand that there are tremendous losses right now in the mortgage banking world. Huge numbers. And you guys are all probably either seeing or going to see some mortgage bankers go under or get purchased or have to merge with someone else because they just have been holding their breath for a long time, which we all have. But the mortgage banks are holding their breath as well. So whenever you see a movement in the mortgage-backed security market, they're going to be very skittish. And that's what I think that you're seeing right there, wondering what is going to happen with the bailouts or buyouts of Silicon Valley and Signature Bank, and it is having a big impact. So let's take a look. Are we really at 6.5? Well, I guess we kind of are, but let's open this up here at United Wholesale. What is it going to take for us to get to that 5.99 that we're always talking about? Just over a half, guys. Just over a half. And for 0.28, a little over a quarter, which 6.375. So look, this is not good news because you remember that we closed on Friday with this at 0.18, right? Wasn't it 0.18 to get to 5.99, and now it's 0.63? Well, now that kind of can make sense because it's going to take a little bit of money. And we've been talking about that for a while, that buy downs are very effective right now. So for a small buy down, you can get into that 5.99 range on the Brent Bruce Daily. Very well qualified 30-year fixed conventional. But if someone says, I want to spend 0 points, no buy down money at all, it is 6.5. So that is a big swing from last week. So just make sure that you always look further into the interest rates to find out what it's going to cost to get to where you really want to get to. So later on in the week, what are we looking out for? The end of the week, the 31st, which is this Friday, is the personal consumption expenditures report. Now, as you know, the PCE is number 2 on our big 4. All right, so the reports from the Federal Reserve as to what they're going to do with the federal funds rate is number 1 on our list. This is our number 2. The personal consumption expenditures is the Federal Reserve's favorite reading of inflation. This is what they look to decide if they feel like inflation is coming down as fast as they want it to. Number 3 is the Consumer Price Index report. The Consumer Price Index report is a very highly regarded measure of inflation that we look closely at as we try to see inflation coming back down. And number 4 is a Producer Price Index, which measures inflation on a wholesale level. And we talk about that each month as well. So big news coming out this Friday, the personal consumption expenditures report. Throughout this week, we're going to talk about what we expect from it, what we think the banks are expecting from it. We're going to try to get ahead of it. But right now, we did have a rough day in the mortgage-backed security world. The mortgage bankers really are hedging their bets, pushing themselves a little bit out of the market there, going almost 0.5% in the other direction. But we'll have to see how things go tomorrow. Make sure that you like, subscribe, and share. Let me know your comments, and I will talk to you again tomorrow.